What's up, guys? Gonna do a little trade recap here. Let's make sure my camera's not in the way. First, so I took two trades today, and one was a very small trade, just kind of testing a model and building conviction, and the other was a smaller trade and not necessarily a micro trade. But we'll draw this 15-minute fair value gap out, and then we are going to there it is right there. Then we will do some replay to show you guys the live action. So So going into market open, I mean, we've sold off crazy amounts yesterday, and I wanted to see the continuation to the downside. I also, let's get this candle out of the way. And we had this 15-minute imbalance. We really don't have any structure looking at the morning right away. So I'm like, okay, we're gonna need to wait a while to get a structure. I like the way we're building these lows up right here, and in my opinion, this is low resistance, and it's generating more liquidity to eventually run to. We have a higher time frame imbalance that I would like to see us reject off of. So we'll slowly go through the price action here. As you see, we keep coming up. You know, we take this high. We're in the fair value gap. We come back down. And then, so we're generating more lows. We still have this low. We have these lows. We have these lows. We have all these lows forming. I'll mark out market open. I'll mark out my macro. 950. So I'm always watching this time. You know, I want to see some market open manipulation, which is right at 930. So if you have the manipulation on the opposite side of your bias, there's a high chance that your bias is correct. So I have this high marked out right here. It's also a 5-minute high. And now what I'm watching is if this high gets taken with rejection, this is going to be your turtle soup. I was looking for it to also be an SMT, which it wasn't. So there was less bias there. I'm still new to this turtle soup model. So I'm trying to be very cautious and build confidence with it overall. So I entered micro size. So you see we come up, we sell down, generate another low, almost equal lows. We come back up. What time is it? It's 9:41. Right here, I'm watching, and we reject. And right at this rejection, I entered a little higher, but I enter short here. We'll go back a little bit. So right here, this doesn't matter. I don't know why I'm fucking with that. So I enter right here. I have very tight stops above the fair value gap because I'm trying to get better at having tight stops. In my opinion, I'm targeting these lows as the low-hanging fruit. So I wanted to see something like this. There it is. So I want to show you this price action though. So we start to sell off, right? We are starting to sell off, which is good. It's really good. You know, we disrespect this. I'm still in here. I'm watching. I think we go all the way out to break even, maybe. No. My entry definitely was down a little bit. It was after the rejection. So my real entry was like, oops. So there. So TP gets hit. Okay. But there's something I want to discuss. This is like my entry, actually. There's something I want to discuss here. And I exited early, and now you might ask why I exited early, but there's a couple reasons for that. I exited like right around here. And so I journal my trades every single day, and I notice patterns when I take setups. And now this trade was micro size, so it's not really where it matters. But there's an SMT here, right? A bullish SMT here, and then you get another bullish SMT right here. So as I'm in this trade, I have a double SMT. A double SMT, more than likely, it should make price go up to here, take this high, and then continue to sell up. I'm still confident that the draw is lower. I still believe this is the draw. But the double SMT doesn't matter necessarily in this trade. It matters more in the next trade, which I'll show you guys. But the double SMT is what makes me exit this position early down here. So a very micro win. I entered micro size. I'm just trying to build the conviction with the turtle soup. That was the first trade, very clean overall. Now, the other trade where I got confidence and sized a little bit more into, not a lot, but a little bit, is right here. Now, on my chart, we came up, took all these highs. Now, it didn't actually happen on the real MNQ chart because I'm on the 8-cap chart, obviously. But it didn't really matter because on the 15-minute, we came up and then we sold off and respected this fair value gap, which I like to see. I think it might have also, what is discount of this range? Yeah, still respected discount. So I'm still expecting to go lower. And I go down to the 1-minute. And I'm watching action here, and you know we're starting to get some sell-off pressure back through the fair value gap. You get a market structure shift. You get good displacement. Now, like this isn't the displacement you want to see. You want to see this displacement. Now, why? Let's delete all this. Nice, cool story, man. Can't clear the charts. So you're gonna ask why? What is the difference? I want to ask you guys a question. I want to see if you guys can answer this. What is the difference between this displacement move right here and this displacement move? The answer is it's a displacement through a swing low. That displacement move right there is a valid one, is a market structure shift, a breaker structure, whatever you call it. It also adds in a breaker block right here, and it also adds in a fair value gap. So that's honestly, that could be your unicorn, while also keeping this low right here intact. Now, if this would have sold off here and took this low, you're not too probable with that entry. So now you mark out your range from the displacement move, not the move all the way from the move all the way down, because this isn't your displacement. This is just a sell-off. The real displacement move is this right here, bang. So you're really looking for a retracement back to equilibrium and a back to these imbalances. You get a touch of the breaker, a touch of the fair value gap. I enter once we get a little rejection. My entry was like right here, I think, maybe a little higher, like that. I had my stops above the 7.9, and I'm targeting these lows. Not a bad 1 to 2 RR. We'll take that any day of the week. This is where the double SMT problem comes in. Let me show you guys. So we get an SMT here. I was viewing this liquidity over here as low resistance. I was expecting this to be low resistance. I think I have it down. Low resistance. I was expecting once one got taken, it was just going to flush to the downside. So we have this SMT here, so I'm very cautious. I'm waiting for buying pressure. We're still respecting this 1 minute fair value gap. Whoops, that's not the right tool. We can get rid of this. We're still respecting this 1 minute fair value gap right here. So I'm still holding my position. I'm waiting until price shows me. Okay, we respect it. We come back down. We create another bullish SMT. Now, that is double SMT, 2 SMTs stacked on top of each other. It might have even been a 5 minute SMT. Yeah, it was a 5 minute SMT at first. So now we have a 5 minute SMT. I'm a little worried here. I'm like, okay, my entry wasn't the best. My entry is probably around, like right here, a little lower maybe. So this is my entry. We'll make this green. So now I'm going to walk you guys through why I exited to show you guys why I think it's a valid exit. So this is my entry right there. Now, we have 2 SMTs. Now, what is the rule of the SMT? The rule of the SMT is when it happens, it is going to drive price to the most recent high to take it and then continue to your draw. So we have double SMT here. So I'm expecting price to come up to this high right here and then continue down to that flush move. So logically thinking, if my stop's right here, more than likely I'm going to get wicked out when we go to this high right here. So I'm like, okay, I'm going to close once we get this bullish candle right here. So I close all of my position on this bullish candle up right here. That's where I closed my position. So I closed early, which is fine. I'm not mad at it. I secured profits. But then look at price after. It flushes straight to the draw. The draw was 100% correct. So you can't be mad at it. At the end of the day, there's nothing to be mad at. I waited for clean displacement, clean 15-minute fair value gap, clean overall. There is no standard deviation to line up for. But that is why I exited early, and I had low size in both these trades. One, because it was NFP, it's Friday, we had a huge dump yesterday. There's no need to be full size today. There's no need at all. Why would you be full size? You're that confident? No chance. After this huge 1,000-point sell-off yesterday, sell-off yesterday was literally a million points. But overall, and the coolest thing was, I did this live in my Discord. The coolest thing was, too, is pre-market, we had this 15-minute NFP candle forming, and I said I would like to see a 15-minute fair value gap form, price draw back into it, create some structure inside, displays, and I'm going short. I called it word for word, bar for bar. I wish I would have recorded to show you guys that. It would have been pretty cool. So if you want to learn stuff, you should join my Discord. If you need help, you should join my Discord. It's free. There's no charge. I just want to help you guys get to that next level, answer any questions you guys have and stuff like that. But these were the 2 trades I had today. And honestly, if you enjoyed this video, you should really like and subscribe. I would appreciate it. You should check out my other trading video. I made a video yesterday on how important it is to journal. I think it's very good to check that out. But yeah, overall, I hope you guys have a good weekend. Have a good Friday. Thank you so much.